Good morning, good afternoon, and I think we have some people that are international, so good evening and welcome to this exciting workshop that we are hosting here live and for CPE. Thank you everyone for joining. Just gonna give everyone just a couple more seconds to get settled in, and then we will go ahead and get started with a couple of housekeeping items, some introductions, and then we'll get into the meat of the presentation. So just give everyone probably another 5-10 seconds to get settled in. Thank you everyone for joining. All right, I think we're getting a couple of stragglers coming in. So again, thank you for joining. My name is Michael Wardy. I'm a certified financial planner and managing director of sales and marketing here at Tri-Merit, where for 18 years we've been working with CPAs and clients on various incentive programs to ultimately help increase cash flow through these different strategies. Thank you for everyone for joining. Just a couple of quick housekeeping items that I want to cover before I make the introductions about Biz and Lee. First, this is for a 1-hour CPE. In order to qualify for the CPE, you will need to be here for at least 50 minutes of the presentation and answer at least three out of the 4 polling questions. You can answer all 4. They're kind of fun and interesting questions that will be put out for the polling questions. If you do have questions, please feel free to add them into either the chat or the Q&A, and we're going to do our best to answer your questions here live as we do the presentation. If we don't get to your question, please know we're not ignoring you. I promise you we will follow up with you with the answers. Lastly, we will send out the CP certificates as well as the presentation deck after the presentation. And with that, I would like to introduce our 2 featured speakers. First, I'm going to start with Lee. Lee Enfield is the president of tax credits and incentives at Ryze, powered by HRLogix. Innovation and leadership are at the core of his approach to navigate the complex tax credit landscape. With over 17 years in the tax credit space, his experience in both sales and operations has proven essential in establishing and nurturing relationships that drive strategic growth for their clients. Lee's current focus is on strategic implementation of incentive programs that align with client business goals and ensuring maximized tax benefits. The team's collaboration with finance, tax, and HR is a testament to their dedication to client success and operational excellence, fostering tailored tax savings opportunities for their clients. Lee does live in Denver and is a father to 10-year-old twins. With that, I would like to also introduce Elizabeth Williams, Biz, who has been with HRLogix since June 2023. She has been in the SaaS industry since 2011, where she began her career as a small business account executive at Snagajob. Quickly, she moved up to mid-market and then to enterprise account executive roles. Elizabeth, Biz, and is known as Biz, created multiple partnerships with brands under the Rourke Capital umbrella and Papa John's, consulting with franchisees and corporate entities to strategize solutions specific to their business needs. Biz founded Ryze Credits in December 2024, with the intention to simplify how employers, CPAs, and bookkeepers find what tax credits they can take advantage of based on where they have locations. Thank you both for presenting today. And with this and a little bit about the webinar, who's this for? It's really for business owners, HR leaders managing compliance and onboarding, and CPAs and payroll professionals. They're seeking clarity on hiring credits. What you will walk away with today, the real story behind WOTC and the expiration and what's likely next, the FEZ credits that still apply and why they're overlooked, actions you can take to support credit continuation, state level credits, and also how Ryze can help find those savings. And with that, Biz, I'm going to turn it over to you.
Perfect. Thank you so much, Michael. And sorry for giving you a bio. That was a huge mouthful, but you forgot to talk about my long walks on the beach and getting lost in the woods, but I'll forgive you this time. So thank you, everybody, for being here. We've got a lot of information that we're going to cover, which Lee is primarily going to go over everything, but I wanted to give you knowledge on who HR Logics is at a glance before we go into that. So we offer a wide array of compliance tools, including I-9 and E-Verify, unemployment claims management, and employment wage verifications, all in one platform with one login and one data file. So for purposes of this call today, we will be focusing primarily on tax credits. So with that, I'll hand it off to Lee to discuss the current legislative landscape.
Perfect. Thank you. We'll move to the next slide. There we go. As many of you know, if you're familiar with WOTC and how legislation works, sometimes slowly up on the hill. Sometimes you need a calendar or a leap year to figure out when things are going to be re-legislated or sunset or reintroduced. So currently, the Work Opportunity Tax Credit, or WOTC as we call it, and the FEZ or FEZ, we have many acronyms we like to use in our business. Those are set to expire end of the year 12/31/25. A little bit of legislative update where that sits. There are bills currently up on the Hill to reintroduce, expand, and enhance the WOTC tax credit. So WOTC's been, I guess, in hiatus a few times, 2015, 2019, and 2020. And the most recent, the Consolidated Appropriations Act extended WOTC through the end of the year, December 31, 2025. There has been a bill introduced at the end of 2023, so that tells you how efficiently our government works sometimes. It's been a couple of years since this bill's been introduced. It's HR House Resolution 1177, and this would increase the current credit percentage from WOTC from 40 to 50% of qualified wages. It hasn't been adjusted for the past 28 years. So with inflation, costs, labor margins, all those things that affect your business, they're going to try to increase the benefit for you. And a second level of credit for employees who work more than 400 hours. Also on that bill is eliminating the arbitrary age cap at SNAP, which is 39 years of age now, to release that to a higher age to incentivize hiring older workers and better align the credit with previously adopted work reforms. With that, there are also some state WOTC credits that are in the pipeline as well to be brought online. There's one in New York, in Alabama, and Arizona. They have their own what we call piggyback or state WOTC credits that are waiting for the bill to be renewed. And those states will have additional benefits for WOTC. So WOTC is mainly at a federal level where you get your credits. So states are looking to introduce WOTC at the state level, which is great if you have nexus or locations in those states. So hopefully maybe omnibus bill at the end of the year where they put everything in there. I guess that's how the pork is made, is what they say in Washington, where they shove everything in the last minute. If not, we feel pretty confident that if it goes into hiatus, it'll be renewed either Q1 of 2026. So that's kind of your legislative update there. And we're happy to send out a little dossier on that after the call.
Hey, Lee, real quick, a question just popped up and I thought it may be a short answer.
Yes.
Do you have to file for the federal WOTC credit if you're claiming the state credit?
Yeah, so you can do that concurrently, right? So federal is going to be on your federal tax returns. It's a dollar for dollar reduction of your federal tax liability. The state level credit would be applicable toward your state level taxes, right? So they're same but separate. So you can take both, or you can just do the federal. So if you don't have a state that has a piggyback credit, I know you can also just file for the federal. But if all these are dependent upon the bill being passed and WOTC being brought out of hiatus.
Perfect. Okay. Thank you. And with that, we have our first polling question.
So, has your business ever claimed the Work Opportunity Tax Credit? We'll let this stay up for about a minute or so, and then we'll get your answers and we'll move on. Wow, a lot of people are in the know right now. Lee, this isn't really surprising probably to you or I, but for the most part, we're seeing about 50% of people not ever claiming WOTC. And we have different reasons for that we've both heard. But it looks like overwhelmingly about 67 to 31% are no to yes.
Yeah, and as Biz mentioned, some of those are industry specific. It could be, if you do, work for the government or a government entity, those in a nonprofit would be ineligible for those benefits. But a lot of companies may not be aware or heard of WOTC or thought about it, and had the opportunity to take advantage of it. So this would be a great education for everybody. All right, so just a little deep dive on WOTC. What is WOTC and who qualifies? As mentioned, WOTC is a federal program that offers up to $9,600 per hire for employing individuals from target groups, being veterans, SNAP recipients, long-term unemployed. There are 10 categories total that you can qualify under WOTC. I like to call WOTC, it's kind of a quid pro quo between the government and people who hire folks that need a hand up or have challenges being hired. They're on government subsidies, and once you hire them, they may qualify for WOTC in one of those 10 categories. For hiring them, they get off the government subsidy, and you get a tax credit for taking them on. So it really does help expand the workforce, give people opportunities, and the employers get a benefit for doing so. I kind of covered why it's in limbo again and the past renewals, so I'll kind of skip over that. It says, what do you lose if you stop screening so soon? So what happens if WOTC does go into hiatus? You keep screening for the credit, right? It'll be renewed, it'll be brought back on. But if you stop screening, then you lose that benefit. There is no retroactivity to go back and capture WOTC. It's a prospective credit, meaning moving forward at the time of application or onboarding. You have 28 days as a compliance piece that you have to submit those certifications to the state. Now, it's a federal credit. This is where it gets a little confusing. But each of these go to what we call a state workforce agency for certification. So your client is screened, they answer the questions. That data is captured by us through a lot of technology, APIs, et cetera, integrations. We in turn take those forms, we send them to the state to ensure that they are eligible for the benefit. Those certifications are then returned to us. And with a payroll feed, we start the calculations on how many hours they work. So there are some criteria of a WOTC on how many hours you have to work to capture credit and the benefit. But for all our clients, we say keep screening because if you pause for 3 months, you lose 3 months of benefits. There's not an opportunity retroactively to go back and rescreen those employees. So it's a prospective credit looking forward. For tax purposes, you can take that credit 1 year back and apply it. It also has a 20-year carry forward as well for those tax credits. So if you're in a NOL position or you can't use them, some people may bank them and carry forward. When they get out of that NOL position, they can apply those to their taxes. Okay, so there are some benefits to WOTC. So a 20-year carry forward is always great. Why now is not the time to pause. As mentioned before, history tells us reauthorization is likely. Tools, like we have in Ryze, we can hold candidates. So when you're ready to go, we can capture those benefits for you as well. So what we do is we flag them. We know they're in hiatus, but when that bill passes again, they're turned on and the benefit is still there for you. So we help you keep your credits going while the legislation is in hiatus. But hopefully, they'll pass into the year or Q1 of 2026 is what we hear from our intelligence on the Hill.
Okay, next poll question. So has your business ever claimed a federal empowerment zone or FEZ credit? So like the WOTC one, we'll keep this up for about a minute and you'll be able to see how everyone else is answering. Wow, okay. So far, overwhelmingly, no. We've got a lot of what's that, so that's good. That's leading into the next slide that we'll actually go into exactly what it is. We've got 5% at yes. All right, rounding it out, get your last answers in, but I believe this is probably where we're going to sit since it hasn't changed in the last couple of seconds. But yes, 5%, no, 81%, and C, what's that at 14%? All right, well, keep on going to the next slide and we'll tell you exactly what it is.
So a federal empowerment zone apply to businesses and of course in empowerment zones. It's a location-based credit. So it's kind of where you have a physical location where you sit. So this is all based kind of like real estate. It's all about location. So what we do on our side is, look those locations up, see if you sit in one. If so, there's some employment criteria. They have to live and work in that federal empowerment zone. It's a simple, easy look for us to do to help, and it can be paired with WOTC when applicable. Okay, so there maybe have to be some adjustments on the back end. They're both federal tax credits. So if people qualify for WOTC, they may not qualify for FEZ. You can take both, but a little bit of accounting and some forensics on the back end so you don't double dip or claim both credits at the same time. Okay. What counts as an empowerment zone? These are designated every year, right, by the federal government. So they go in and they look at areas that are distressed, have high unemployment, low wages, and their job is to drive business and hiring in those areas to build that community up, right? So what they do is they go in every year, take a census. That's part of your census. They look at the areas and say, this is going to be a new empowerment zone this year. A lot of those empowerment zones are around metropolitan cities and the outskirts. And one example could be Miami, Baltimore, Louisville. There's a set list of those that are sent out every year at the beginning of the year, which are going to be new empowerment zones, or some that it may have improved, maybe taken off. So it's a yearly adjustment on the federal government side to say these areas are distressed. Let's give benefits for hiring and growing in those areas that are distressed. What records do I need? So this is pretty simple. So again, it goes back to location. So a physical location list. Your locations, we can look those up, run them through our location-based tool, which we'll go through later. And if you sit in one, and then we can have the conversation and see what kind of eligibility you have. Again, the most critical criteria there is that they have to live and work in that zone a certain amount of hours. So that's something we can do through a discovery call to see the benefit for you. But again, another federal tax credit that people may not know about, and you may be sitting in one right now. Why don't all CPAs bring this up? CPAs have a lot of work to do, a lot of different roles they play for their clients, and sometimes it may not be the time and research and looking at legislation may not be something they have time to do. So sometimes larger CPAs may have a tax group in-house which does this. We run into it a lot, saying people don't know what it is, or they haven't looked about it, or is that something I'm eligible for? So our job is to help partner with the CPAs to let them know what's out there for their clients and bring those opportunities forward. So we're kind of a knowledge base and a partner with CPAs. Not here to take jobs or anything, but just to help their clients understand what benefits are out there and partner with them to capture those benefits and put those on the tax returns for their clients.
Lee, could I add to that real quick too?
Yeah.
Just something that we ran into when actually creating the mapping tool was that it was hard for us to know exactly who qualified because it's not mass city. So when you mentioned Miami, it's not all of Miami. It's not even specific zip codes in Miami. It's actual census tracts. So if someone qualifies on one side of the street, the business directly across the street might not actually qualify because they are not in zone. So that's where it's important to, partner with somebody like us where we can actually look that up and see immediately if someone qualifies or not.
Yep, that's exactly right. Those things are drawn in, right? So, not all of Miami, maybe part of Miami-Dade or, but those things are drawn in each year. So that's why they go in each year and say, okay, this year this side of the street's eligible, like Bill said. Next year you may be on the other side of the street and you miss out. So, like I said, it's just about location and kind of diving into the details and making sure that those qualifications are still valid.
Lee, a question just popped up. How does, actually two, I'll read the first one. How does employment zones work for contractors who work at various job sites if their main site is not in a zone?
Okay, great question, right? So if you're in construction, and if you're working on a site that happens to be in a federal empowerment zone, we would look at your contract terms. How long is your build and how long are those employees going to be on site in that zone? So there's some qualifications around, say it's a 2-year build, most likely that will qualify you for a federal empowerment zone credit. If you're there for 3 months, probably not. So there is some timing we look at and say if you have a build site and your contract says 18 months, you may be eligible to get that for, a year, right? So it all depends on how long your employees are on site. They may be headquarters, let's say, out of Dallas, and they're doing work in Miami. If the build takes a certain amount of time, then we can look at that benefit and capture it for you. That's a great question.
Perfect. All right. This next question, I'm going to kind of put it together as best as I can. It was a rather long question, but ultimately what they're asking is, if we're in an empowerment zone 1 year and then 2 years later we're not, can we go back and benefit from when we were in a prior year?
That's correct. So all federal tax credits, with the exception of WOTC, have what we call a look-back period. Most of those are under a 3-year statute. And Biz is going to talk to another one later on. But if you've been in one and you're like, hey, I'm in the zone here, we can go back 3 years and bring those credits forward for you. So there is a retro opportunity for the federal empowerment zone.
Perfect. All right. Thank you.
I think we missed a poll question there.
Oh, sorry. We have another phone question.
It's perfectly fine. So with all of the legislative changes that are occurring, you are able to write notes to your legislators and, lobby for what is important to you and your business. So do you know how to contact your federal legislators about what's important to you?
Well, that's awesome. Look at that polling. That's great. There we go.
We're at 62-38. It was overwhelmingly yes at first, which was awesome news. I love seeing that because there are a lot of things that get passed every single year, and I think it's important for U.S. citizens to fight for what's important to you. But this is really good to still see that it's around 62-38. I think that might be where we're going to stay. Yeah, I don't think it's moving. I think we can go ahead and close that poll, Mark.
So in this one, we like to help. So we're big advocates. In Washington, we help not craft legislation, but we help try to push the buttons to keep legislation going for everyone that needs tax credits, right? That can be for WOTC, that can be for renewals, that can be for state level credits that we work in, that may be sunsetting or expiring, advocating to keep those and help businesses, right? So there's an easy way to find your congressman or senator. We have a don't know if we have the template attached, Biz, or not, but we have a template to help we've crafted before that you can send, and your time and outreach for maximum impact. And and a little excerpts on what to say if you're not political. We don't like to be political all these days. But these are the times where you can get political. How does it affect your business personally? Tell a story. Am I gonna lose jobs? Am I gonna have to move out of state because of certain taxes, et cetera, or benefits are being taken away? So always fight for your business and try to protect those tax credits that are impactful to you and yours, right? You have not only clients, you have customers, and you have families that you support. So we're always looking a way to take action and support companies and their well-being and growth here in the States. And I know this is one of those things we keep talking about, but it's really important. So past expirations were followed by full retroactive approvals. If you think of our current administration, I would probably think this will be renewed fairly quickly, because I'm sure President Trump loves to take advantage of the work opportunity tax credits with all his hotels and business enterprises, right? So it's kind of self-serving at the same time. But there are a lot of organizations, committees, franchise associations would have signed on to the bill and lended their support in written letters. There's probably about 200 groups that have written in to advocate for keeping WOTC. Again, our company will flag and hold candidates automatically, so you're ready when the renewal hits. There's no downside. You're only billed on actual credits, no cost of screening during a hiatus. So we still keep doing the work for you. There's no cost to that. And the main upside is, for protect your future savings, right? So continuing screening is always important. Just because the bill is paused doesn't mean we won't work for you, and that we should still be capturing credits on your behalf.
Hey, Lee, question just came up.
Yep.
If we're hiring, it looks like this business is primarily focused on the summer help.
Yep.
Should they still screen for that? How does that, when does that make sense, or how does that make sense?
Yeah, so some businesses are cyclical, right? So you have volumes. It may be summer, students out of school, you grow the business. Same thing around the holidays, right? There's a lot of hiring around the holidays, retail, QSRs, et cetera. So you keep screening, right? There should be not really dependent on age group or any categories outside of that. You just want to keep screening. So just keep running it. I guess is the simplest way to say it. But there are, like, if you're in certain states like Texas or New York or Louisiana, they have credits out there already. There's one's called the New York Youth. We'll kind of get to that in a little bit. Louisiana Youth, and Texas has a TANF program. So there are states right now that do have concurrent credits that run with the federal side on WOTC. Mm-hmm. And so keep capturing those credits, right? Let's just keep running them for you. We'll get to the other credits here shortly, but there are states out there that do have WOTC counterparts that we can help you capture at the front end and run those concurrently, which is really nice.
Perfect. And then question just came in, and I think it's just a statement on bullet 3, Ryze flags. What is the Ryze flag is Ryze will identify and hold candidates automatically. Correct.
So what we do is in our system, when you screen, as I mentioned, that those screenings go to the state workforce agency. It's going to come back as a certificate as they are qualified and eligible. When that comes back to our system, we flag them and saying they are eligible during the hiatus. So we know which employees are eligible, and that way we can continue capturing the benefit for them. If they're not eligible, we won't flag them. So it's just mainly something for our system and our clients to help ensure we're capturing the maximum benefit for them during the hiatus.
Perfect.
Yeah. Usually a flag means a penalty or something that's football season. So my mind's on football a little bit. You're getting penalized. Here, it's a good flag, right? So we want to keep that going on.
Exactly. All right, next
Yep.
poll. And again, we do need you to answer at least 3 out of the 4 polling questions to make sure you are eligible and staying on for 50 minutes at least.
All right, so are you currently claiming any state level tax credits? And this, I know we have quite a few CPAs on this line as well. So are you searching and claiming state credits on behalf of your employee or your clients if you're on the line? Let's answer yes or no. And just like the other ones, we'll keep it up for about a minute or so. And honestly, the results on this are not surprising at all. So if you answered yes or no, you're seeing the results right along with me. But overwhelmingly, 84% have answered no. And we'll get into that in a couple of slides as to our theories on why. But 16% yes, actually just changed. 15% yes, 85% no.
I think we'll have a couple more trickle in here in a second. Maybe. There we go. All right.
WhatsApp, yeah. So like I mentioned, it's not surprising that many people aren't doing state credits. There are 64.8 billion in tax credits that go unclaimed every single year, and they are primarily state credits. So this is due to a misunderstanding of what is out there, the massive research that has to be done to see if a business qualifies, how to process. So a lot of CPAs or other tax credit companies stay away from talking about credits that they don't understand or may take hours to research. So Lee had already mentioned this previously, but Ryze does piggyback state credits where we can on top of federal credits. So the credits that he already mentioned, Texas TANF and youth credits, we have the ability to piggyback those on top of our WOTC survey. So if you're screening for WOTC, the employer and new hire are in Texas as an example, will surface up an additional question about Texas TANF. Similarly for youth credits in Louisiana and New York, if they're answering questions on the WOTC survey, they are living in New York, they're between the ages of 16 and 24, and they're answering questions on the WOTC survey and applying for a job in New York as well, we will surface up an additional question. Benefit to employers is there's not another process, another form for our new hires to complete in order to take advantage of those credits. It's all one process. Another credit that I will say has got a huge misunderstanding about it, especially in the last legislation where there's not going to be tips or taxes on tips anymore, and that's the FICA tip credit. So the FICA tip credit actually has nothing to do with the legislative change on no tax on tips. However, the way that tips are calculated are currently as revenue for the business. So think about it when you get a check and you pay with your credit card at dinner, that entire check is going in as revenue for the business. So the tax credit is actually there to help offset the income tax liability that businesses pay due to the way that that revenue is reported. So interesting, the FICA tip credit was actually recently expanded to include the beauty industry. So where previously it was only available to food and beverage industry companies, so only they were able to take advantage of the tax credit. But good news, now it's expanded to the beauty industry as well. And this can be a huge credit for people. And I say this because we had a very large QSR franchisee who was utilizing a CPA as well as a tax credit company to process their credits. And they thought that they were taking advantage of everything. So I said, let's just do an analysis on your company. We'll put your locations in, your annual number of hires. We'll take a look at your payroll. If you're already doing everything, fantastic. That's wonderful. They were actually missing out on FICA. And what this meant for the business was a $2.5 million tax credit for them. So fortunately, they had not filed their 2024 tax returns yet. So we were able to go back 4 years. And again, to the tune collective total, $2.5 million. And he looked at me and he said, Biz, why? Why wasn't this tax credit being processed? And I said, buddy, I can't explain that for you. But it just means that things can be missed, and they often do go missed. And so it's really important to do a tax credit analysis with a company like Ryze by HR Logics, just so that you can see if there are things that you are missing. We want you all as CPAs on the phone to be champions. We want your businesses to look at you like you're heroes, that you're saving them tons of money. We don't want to be the ones to bring the news to them that there is something that's been overlooked for them. So partner with us, let us see what we have available for your clients and be the heroes for them. Let us find another $2.5 million for your clients as well.
So here we go. So kind of gets into our mapping technology and tool. So we map federal, state, and local credits by business location. Again, just a physical location. We drop these into our tools. We can estimate savings in seconds. We identify stackable opportunities, right? What can you take concurrently on top of each other? They may be separate credits. We love to educate the CPA or accounting partner using data, right? Night guesses, or we think, these are hard and fast credits based on your location. We can look at. Some may take a second layer of questioning, right? Maybe looking at spend, growth, hiring, et cetera. Just as a side note, there's over 3,000 state and federal credits out there, right? So we're going to look at all of those for you. Some may not be applicable. Some may not move the needle for you, and you're like, hey, that's not worth our time and effort. Our job is to bring all these forward, have a conversation, say, hey, what looks good to you? What would you like to start with? Or do you want to look at everything? So what it really is a roadmap for your company to look at all the opportunities that are out there for you. But the tech is pretty cool. Some people may call it sexy. I think it's amazing. But the ability to go in and just drop in a physical location list, come back to your client and say, hey, here's 8 opportunities. Are you aware of these? Some may say, hey, we're aware of WOTC. We may do a federal empowerment zone, but what are these other state and local level credits we have never heard of? It looks like a great benefit. We have tax liability in these states. We'd like to erase that if possible and have cost savings in our pocket. One of the great things about tax credits can be used as a business tool, right? So instead of paying your quarterly estimated taxes, if you have credits out there, you don't have to put that money out there, keep that cash in-house, use it as a budgeting tool. And it makes companies' bottom line and fiscal reporting, I guess, much healthier, right? If you can say, hey, we're doing this and this is our savings for the year and we didn't have to pay these taxes. So no one likes paying taxes. This is a great way to look at everything at one time and see how you can reduce those and put money in your pockets for expansion, growth, acquisitions, labor retention. That's a big topic these days, or upgrading technology, products, and services. So our job is to come in and help you grow your company, find these credits, show you how to monetize them, and then it's up to you how you use those extra funds that we find. But our job is just to be a advocate for your business.
I want to add to this as well, since we're running a little bit ahead of schedule here. So, but for this tool, there are other tools out there. So anybody that's actually searched for various tax credits themselves, having to go to multiple different sites, has usually been the experience of others. So you go into one site, you look and see what's out there. It's muddled with things that may already be expired or that you don't qualify for. So one of the primary reasons that Ryze exists and was founded was because there wasn't a simplistic tool out there to show what's available, what's the description of the credit, how do I qualify, how much is the average credit, is there a look back period, is there a carry forward period, and how do I take advantage of this? Is this something that I'm going to have to apply with the state prior to being able to take advantage of it? And again, that's another reason why a lot of CPAs don't do this, because it does take a lot of work up front in order to qualify. So if you're only looking at tax credits when you're actually filing credits or your tax returns, you may be missing out on a lot of credits that could be available to you. To Lee's point earlier, some of these credits could take hours for us to process, but that's why we have a team that can do that. So we help identify credits for CPAs and bookkeepers to bring to their clients, but we also have direct customers that are referred to us to help process those credits, complete the necessary things and tracking to then give back to their CPA and bookkeeper to file with their taxes. So we don't file anything at all. We help identify credits, process the information that's needed, give back the information to the CPA and accounting firm to file with their taxes.
Yeah. And a business point, each state is different in their tax credit approach. Some states are better than others. Some have more lucrative credits than others. As Biz said, sometimes it's an application process up front to see if you qualify. Some are done by lottery. Some have tolerances based on hiring, spend, and growth. So there's a lot of nuances in the state realm. But it's our job to go in and say, hey, here's what's out there. Here's the effort behind it. We'll help you through that. And to the point is, if we go through the exercise and it's a 0, we get a 0. There's no upfront cost to help analyze, educate, and be a client advocate for you all. So our work is done up front and good faith.
Perfect. All right, couple of questions. Actually, this created a lot of questions. All right, we'll start from the top. If the age limit is removed on SNAP, currently 18 to 39, would it go back retroactively? So for example, an individual on SNAP hired today at age 42.
No, so that's one dependent on the bill being passed. So it'll be prospective when the bill is signed by the president and fully legislated into law. So we won't have a retro opportunity to go back and capture those SNAP employees that are aged 42, for an example. So it's going to be all prospective going forward.
Perfect. All right. And do you do work on state credits too? Do you know anything about, I think this is the Rhode Island apprenticeship credit?
The Lower Island apprenticeship
Rhode
credit.
Island.
Rhode Island.
Sorry.
So it's more of a, that looks like when you have a trade school or you're hiring people and they go through certain types of training, we definitely can look at that for you. We do have lots of training credits out there. There's Georgia, they have, Illinois has a training credit, California has an ETP, employment training program, and that's just a state by state. Not all of them have training credits. Kentucky has one. Arizona has one, but it's really state by state. Not all states have that, but if it's out there, we will look at it and make sure go through the qualifications. You have to have some tolerances on how many people you hire. It may be industry specific. A lot of the time, states will like to have higher paying jobs, right? So it may not be qualified for retail or QSRs, but it may be for manufacturing or construction or technology. States always want the highest revenue and tax dollars they can get. So sometimes they slant it towards full-time work and certain categories of hiring. But as we say, if it's out there, we'll look at it for you, walk through it, and see if you're eligible for that.
I want to just add to so if we are looking at payroll, so I know this is just something you just said, Lee, for full-time, it can be an average. So you can take part-time hours and conglomerate them together in order to come up with, like, let's say you have 20 part-time people. Oftentimes you can use 20 part-time people to come up with qualifications for 10 full-time people.
Yes. Well, that's on the state by state. Specifically, that one I know is in South Carolina. So if you hire half-time people, you can combine together for the full-time equivalents and qualify for the benefit. So a lot of states do have that, where you can aggregate part-time people into full-time and qualify for the benefit.
Perfect. Another question came in. I am a tax preparer. How do we get help from you?
You better call somebody. No, I'm just kidding.
All right.
Yeah,
the
no,
we're to start this thing.
Yeah, we're. I'm sorry to do that to you. I'm an awful singer, so but it was just perfect timing. I'm awkward. So yes, you can call us at any time. I think we've got some information at the end of the presentation here with my information or Lee's information. Connect with us on LinkedIn. Send us an email. We'll be happy to help you out and get you on the platform.
Absolutely. Another question came in. If we already partner with Tri-Merit, this is from a CPA firm, do we access the tool? Do we have access to the tool, or do we just refer the client directly to you? How does that work with you guys?
I love that you already partnered with Tri-Merit. So we actually have a partnership with Tri-Merit as well. So you guys are great partners, Michael and team. We appreciate that and all the business that you bring over to us. They do at Tri-Merit have access to this tool. However, as far as in-depth whether or not the business would qualify, an additional Q&A about the credits that we find or they find, it would be best to come direct, but you can always go through your rep at Tri-Merit to get in touch with us as well.
Perfect. All right. Another question. This is like a two-part question because there was a different question I'm going to tie in with this. Are there any industries that don't qualify for incentives and tax credits? And I'm going to add in another part to this related to the cannabis industry, which I know I personally get a lot of questions from CPAs saying, what's out there for the cannabis industry?
Yeah, so any industries that don't qualify, anything doing, work for the government. So if you're a school system or a county system, anything .gov, pretty much, your payroll is funded by the government in one shape or form. So those, are pretty much automatically disqualified. I'd say 95% of the time. Also, you have to be a for-profit entity as well. So you're paying the taxes on that. As far as cannabis, there are some state level credits that you can do. Unfortunately, cannabis is still not recognized at the federal level, right? So there are some state level credits on the cannabis side we can look at. We know California is famous for their R&D program for cannabis. I live in Colorado. Same here. We have some state level credits and benefits for cannabis. But that's just gonna be a one-off. We'll do research and see which states do have benefits for cannabis. It's not so much on the retail side or the selling, but if you're doing R&D, manufacturing on the cannabis side, there are usually some benefits out there for you. But the store level, we have found that has not been successful in the past.
Perfect. A statement / question just came through. It sounds like this is what the bigger companies, like the Fortune 100, have access to already and have had access. It sounds like what you guys have built is allowing for small to mid-sized businesses the same resources.
Absolutely.
I agree with that statement.
Yeah, 100%. I mean, we have small businesses down to 50 employees at their locations up to, America's largest retailer. But we wanted to focus on bringing this and having action items to support small business and medium-sized businesses that don't have the same resources, Michael, to your point, or whoever put that question in. To be able to give them a leg up as well. Oftentimes, these big companies utilize tax credits to fund other things, to Lee's point. Veteran credits is an example. Walmart out there for 10 years had an initiative to hire veterans because they come with a large tax credit. So we want to give those same abilities and resources to every business, regardless of size. Just the one caveat, you have to have tax liability in order to take advantage of them.
Yeah. I will say, having worked in one of my old positions, working Fortune 50 companies, that their purview is mainly on stock price shareholders. So they'll take anything they can as far as tax credits. There are some outliers, and I'll tell you a quick story. I won't name who, but we did some work in Georgia on a retraining credit. And it was a 7-figure credit for a large retail organization. And we were really proud of our work. We found them $4 million benefit in Georgia. And the CFO came back and said, "Hey, Lee, that's a rounding error." and we don't want to take it. Can you get us 5? And I'm like, well, 5 will give you an audit. And no, we can't adjust our numbers so you can take the credit. So it is one of those where, large companies do have thresholds. They have criteria like how much credit can they take. I did even ask him, I was like, hey, I own some of your stock. Shouldn't you have fiduciary responsibility to take this benefit? I'm a shareholder of your company. He's like, no, that's going to be a rounding error. So, it's different optics the larger the companies get. I will add to Biz's point that, they may use a Big Four or a large accounting firm, but sometimes those firms won't do these credits that we do as well. So they miss out, right? Because, it doesn't work for them, or they don't know about it, or the large accounting firms have to make a certain amount of dollars to do that project, right? So they're on a WIP or an hourly rate. So if it doesn't, fit their billing, sometimes those will go undone. So for a lot of Fortune 50 companies, we found other credits that we've done outside their large CPA forms, and even internal tax teams, because it doesn't, their hourly rate or whatever, they don't see the benefit of it. So sometimes you can find, larger companies that will let you do work for them outside of, some of the other credits that they do. But to your point, we want to help bring this down to the masses, educate them. Just because the big companies can do it doesn't mean you can't do it, right? It is not a hierarchy or a tiered system. Everybody, if you're eligible, you're eligible, is the point.
It's true. So true.
Let's see, if you are a CPA, let's see, not all accountants have time to research the credits. We talked about that before. Just start a conversation, you know what to ask, bring some data, not some questions. We're going to help fix things, educate you. And some of the key questions here, these are things we see all the time. Are we doing WOTC? Are we claiming state and local hiring credits? How do we track? Are you using a tool to help identify these opportunities, which we've gone over our tool? It would be help if we use a system simplifies this for us both. So we're going to be a one-stop shop to look at all credits, incentives, help you, guide you. I'm really big on education and being consultative, helping companies structure what's best. I always ask the question, what do you want to be when you grow up, and how do we get you there? And where did you come from? Let's look back a few years, and did you have acquisitions, spinoffs, stock sales, asset purchases? All of those are tax triggers as well. So we kind of get a story behind your business, where you've been, where you're going, and what do you want to be when you grow up is always something I like to ask. So we like to have conversations and understand your business. You know better than we do. We're just here to help make your business better, help you realize some benefits, and help you grow and prosper.
Very good. And with that,
we do. Everybody make the 50. Everybody gets the 30.
we are good. I want to open up for any other questions. One last question that did pop up. How do I get my CPE certificate as a CPA? We will issue your CPE certificate. We'll go through and make sure that 3 out of the 4 questions were answered. You stayed on for the minimum requirements. You will get an email with your CPE certificate. If you do not receive it at the latest by Tuesday, please reach out to us. And then you can reach out to us right at this email address, info@try-merit.com. And then we'll look into it, make sure that it did get delivered to you. Closing thoughts, comments, remarks from Biz and Lee. Thank you both again for sharing this insight and the value behind what you both do. Any closing remarks?
No, I'd just like to thank everybody for their time today. We appreciate everybody attending. Hopefully it was educational. Hopefully you learned a few things. That was the main takeaway. And we'd love to hear from you. We love our partners at Tri-Merit. Thank you, Michael, and team for partnering with us on this. But it's always exciting. I guess we're kind of geeks. We love numbers. We love tax credits. We love legislation, and you can't find many people who like to read legislation. So you might have a few right here. So we may be an odd lot, but we love to help, have conversations, and anything we can do for you we're always open to help.
I did see in the chat somebody had said, "Does Lee not have a camera?" And I'll make a joke about that real quick. we were joking that Lee has a face for radio, so we wouldn't allow him to actually come on camera. But
Yes.
due to some technical difficulties, his beautiful face could not be shown today. But you will be able to see his face on LinkedIn if you connect with him, and any other future things. We hope to get him fixed up and his makeup on for next time.
Yes, the wide angle lens was not available to capture all my good looks, so I apologize.
And hello from San Francisco, that note.
I was just going to say hello.
Yeah, but again, thank you all so much for being here. Thanks for putting up with us for the last 54 minutes and hanging in there. But I hope you guys learned something from this. And again, if there's any additional questions or answers that you'd like to review with us, you've got the email address and phone number for Tri-Merit on the screen here. And then maybe, Michael, we can follow up with Lee and My's information also when you deliver the CPE credits.
Absolutely. We will take care of that.
Yeah, but again, feel free to connect with either one of us on LinkedIn. You've got Lee's name there. My name on LinkedIn is actually Elizabeth Williams, and there's quite a few of us. So look for the one with the backpacking image. Again, bringing back, I like to get lost in the woods. So
very good. Well, thank you, everyone. We appreciate it, and we'll get the CP certificates and the deck out to you shortly. Again, if you didn't receive it by Tuesday, shoot an email over to us or give us a call, and we'll make sure that it does get delivered to you. With that, enjoy the rest of your day, be well, and thank you again, everyone, for joining us. Take care.
Thank you.